What is up, YouTube? This is the Working Investor. This market is so crazy. You can have two people sitting next to each other, two investors, and one person could be experiencing can I say it, a recession? And one person may be experiencing just a tiny little blip in the market. And it's like the tale of two cities. And unfortunately, I am in the side where I'm experiencing more of a drawdown. And you'll see here, for example, like the S&P 500, if you just go month over month, it's only down not even 1%, right? And we're actually like pretty much close to all-time highs. So I wouldn't even call this is a nothing. This is just a regular thing that the market does for people who have risk with the market, relative risk to the market. You know, the past week it's down less than 3%. The past month it's down not even 1%, right? And people who have Bitcoin correlated assets, the past week, if you go to the 1 week chart, it's down almost 12%. And the 1 month chart, it's down 15%. People who have Bitcoin leverage funds like MSTR, which arguably I would say it's kind of almost like a leverage fund, they could be down way further, or MIST, which is the derivative of MIST. This is not financial advice, legal advice, any type of advice. We're going to talk a little bit about what I am doing and some of my thought process of my personal journey. Let's get into the video. So obviously the sentiment definitely changed. This is the fear and greed index, and you can see we've gone into extreme fear. A year ago we were in extreme greed, so we completely flipped, from extreme greed to a week ago we were neutral, and now we've gone into extreme fear in the market. And now that's the market. What about Bitcoin? Also gone into extreme fear. This is from CoinStats. So this is my thought process of my strategy, and talking with other investors, this is what I've come up with. So, the market is down for some people, and now what do, right? So there's certain environments where you want to be risk on, and certain environments you want to be risk off. The saying is, be greedy when others are fearful, and be fearful when others are greedy. So, in my humble opinion, not financial advice, this is what I think through. When the market is overly bloated, that's the time to start being fearful, meaning building up some hedges, maybe some uncorrelated assets, maybe some collateral loan obligations, maybe some cash positions, maybe some rebalancing, from alpha to beta, things that are overperforming, more volatile in both directions. Because when you think of, maybe some treasury products, whatever you want to do, and then that's kind of more like a risk-off environment, maybe prepare for taxes. But when the market is down, when there's a bloodbath, or maybe certain sectors are down, and maybe not overall, it's not like endemic everywhere, then maybe, that would be more of a risk-on environment. The problem is if people are over-leveraged or have no dry powder left, it's hard to, make any moves, when the market is down, if there's no dry powder left. So, there are funds that are alpha and beta. So when I talk about beta, I think about funds that are more correlated with the S&P 500. So here is a chart that I have from Google Finance. So you could see here, the light blue here, that's the S&P 500. So you could see, I'll make it simpler for you guys. So you could see the yellow is the NASDAQ, the 100, and the blue is the S&P 500. So obviously the NASDAQ, I would arguably say, it has a little bit more alpha. It has more of that upside momentum, but also can fall harder potentially. The S&P 500, and this is the 1 month chart. You can go to the 1 year chart. They're very correlated because they have a lot of overlapping. About 34-ish% of the S&P 500, covers almost everything that the NASDAQ has. So there's a lot of overlap and correlation. And now let's add in the Russell 2000. So you could see on the 1 month chart that the Russell 2000 was hit a little harder because small caps, have, in my opinion, they have less reserve and less airbags and parachutes when the market goes down. So they can get hit harder, but then they could possibly jump up faster because it's easier for a small company to go, $1 million company to go into a $1 billion company than for a $1 trillion company to go into a, multi-trillion dollar company, because there's more inertia, in my opinion. So now I'm going to add Bitcoin to the mix. Oops. And you could see that Bitcoin really, this is all the 1 month chart because a lot of the events happen past month. So I just wanted to illustrate that. You could see here Bitcoin's down 14, in this chart, 14.8. Sometimes the percentages could be a little bit off when you look at different software, but you could see basically, the top, the S&P is down 0.77%. So Nasdaq actually is down 0.41, relatively speaking, interestingly enough. But the Russell is down, 4 times as much as the S&P 500, and then Bitcoin and Bitcoin correlated assets probably follow, right? They're correlated. They're down about 14 to 15 times more, so like almost into like real pullback territory over here. There are ways you could put on like leverage upside, like double leverage Bitcoin or double leverage MSTX. But the thing is, you need to be able to figure out and time the bottom. If you don't know where, if the thing is falling further, you could just compound your losses. It's high risk, high reward. If you're good in TA and you're confident in what you're doing and you have a plan to exit the position without losing too much, maybe it could be something you could think about, but I don't know. That could. Then there is something called hedges. So hedges could be, I'll give you an example of a hedge that I did yesterday. So let's say I have about $40,000 worth of Misty, right? So that's a Bitcoin correlated asset. So let's say in my portfolio, I looked at all my Bitcoin correlated assets, and let's say if you held YMAX, more or less, I would say about 10% of it is correlated. So let's say you have $40,000 total of Bitcoin correlated assets. You have to look into your portfolio. If you have YMAX, think about it's about 3.5% per holding. That's how they have it. I looked at their holdings today. So Misty Coney is 2, YBit is 3. So at least 3 assets are directly Bitcoin, or Bitcoin correlated. So it's about 10% of that. And then if you have feet, then 40% of that is Bitcoin. So you have to figure out how much of your assets are Bitcoin correlated. So let's say if you have 40,000. So I put on a 5% hedge. So I wanted yesterday. So I wanted to have a little bit of a damper. So I did, times 0.05. So I needed about $2,000 of a hedge, of an inverse. So I put on SBIT, which is basically a double leverage inverse Bitcoin hold. And I just did the play, just kind of scalped a little bit, made a few dollars here and there. But that's only for short-term play that I put on yesterday. That was just a very short-term position. I'm just giving you an example. I don't want to be, if I'm bullish, I'm not going to be shorting all the time. So I came to a conclusion that like YMAX, like I said earlier, it's about 10% Bitcoin correlated. So I did some strategic rebalancing. I noticed that Feet is obviously 40% Bitcoin correlated because, it has 5 positions and has basically equally divided. So 2 of the positions one of them is Misty, one of them is Coney. So that's 40% is about Bitcoin correlated. Misty, which I have, is 100% Bitcoin correlated. And I have a little bit of LFGY, which is 100% Bitcoin correlated. Now here's the kicker. At least LFGY has its own independent option strategies that they do. But if you have Misty, like I had, the same exact Misty holdings and exact same strikes are in Feet, and the same duplication of Misty is also in YMAX. 3.5% of it in YMAX, 20% in Feet. And to be honest, a lot of times when the market is down, when the market's up, sometimes I was trying to. I used to do a lot of analysis, but I was trying to hit a certain income goal, and I was putting aside some of my logic. And sometimes you don't think logically when the market's up because everyone looks like a genius, but when the market's down, then you think hard and you think thoroughly if you really should have bought in that spontaneous fund. And I did not like my position in Feet because it literally, everything I have in YMAX is duplicated in Feet because it's the exact same holdings. It not only the same holdings, the same strikes and everything. So if they mess up in the single stock ETFs, it affects me in the single stock, affects me in YMAX, affects me in Feet. You know what I mean? Even if I have the same holdings, but at least if they have different strikes and different ways of managing it, that makes me feel a little better because it's a little bit more, kind of like parallel diversification. It's kind of the same but a little different. So I wasn't comfortable with that. So I got rid of the Feet, and so I basically locked in about a $3,000 loss. I did receive about $1,200 to $1,400 in dividends, so it kind of dampened the loss a little bit, but it's still it's still a locked in loss, and that offsets capital gains. And basically did some rebalancing. Bought a little bit of YMAX in there, And feet was about, actually ended up being like a 55% yield, 55-60%. YMAX is 45-50% yield. So I took down a little bit less percent upside for a little bit more diversification. Some may say diversification, but for me, I was happy with that. And, I bought some AIPI and some GPTY. That was just my personal call because I know that Palantir is down, and that's really, and, NVIDIA and Palantir are really, affecting the AI sector. But that's where, but I definitely want to be on risk on. I only bought a little bit of beta because really, for my mind, the best time to buy beta would be when the market is up and overly bloated. Everything's overly expensive, so just stick with beta. And you guys really saw today relative market risk. The market was down less than 1% month over month. When I say market, I mean S&P 500. But people who are heavily in crypto correlated assets could be down much harder than that. Again, everything here is not financial advice, not any type of advice. It's just my personal journey. Hope you guys have a wonderful trading week. Let me know what you guys are doing in this environment. Are you guys affected? Are you guys heavily weighted in Bitcoin correlated assets or AI correlated assets, specifically Palantir or NVIDIA? This is the Work Investor over and out. Have a great trading day.